you. Good morning. I'm so excited to be here and see all of you in person because if you don't know, I started this position as the local government director with the state auditor's office it was 1 week before the shutdown. So typically, what I would do in this kind of position is that I would go out and I would meet all of you, and I would go to events like this, and I would get to sit and talk to you and get to know you, and I didn't get to do any of that. So I'm very excited to be here. I want to apologize for the fact that I feel like I don't have that connection that I should have by now over a year into this position. So I would encourage you to reach out to me if you have any questions, but also I am going to make a more active effort to get out and meet you. And like today, instead of coming in, presenting, and taking off, I'm going to hang out here for a little while, hopefully, have lunch and kind of talk to you and get to know some of you. So I just wanted to say that it's nice to see all of your smiling faces in person. It's a lot easier to talk in front of you than it is to talk to a computer screen. I'm Kim Diller. I'm the Director of Local Government. I started in March of last year, and prior to that, I worked for a couple of state agencies, and prior to that, I spent the majority of my career in local government. I worked for, I worked for Indianapolis, and then Marion County, and then the city of Lawrence. And then I went back, finished my master's, and then I started at the state level. So all I have left is the federal level, and I should have it all covered. Janie, unfortunately, is not here today. She had a funeral to go to, and I feel lost without her, so bear with me. She did prepare, so as today we wanted to talk about the settlement process in a little bit different way than I have, and then she had prepared a settlement Jeopardy game, which I'm going to have some questions to ask at the end of this if we have some time, but I'm not going to the great lengths that she would go to because I'm not near as much fun as she is. And I'm going to let her save that for another time. So today I wanted to talk about settlement. And I've talked to you guys about settlement before, and I know that Bob before me has talked to you guys about settlement. And we've done it in a variety of different ways, but it seems like, at least for me, I have focused more on the steps that you have to follow. Like, here are the forms you have to fill out, and here are the steps you have to follow, and here's your checklist, and I'm going to send you all of these instructions, and you're going to do all of this stuff, and you're going to get it done. So today I thought that I would focus more on why we do it, the way we do it, and what dictates the way you have to do settlement. So as you know, in our world, everything we do because it's required by some law. Right, and so when I started in government, that's what I learned very quickly, is that if someone said, you have to do blah, 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 I'd say, well, where is it in the code? Or where is the ordinance that directs this? So that I would know exactly what steps are needed to be followed. So the settlement process is no different than that. It is required under Title VI. So Title VI is taxation. So if you ever... it's a large, very large bit of text, and within it is Article 1.1, which is for property taxes. And then within that is Chapter 27, and that is settlement. Now, as I was starting to prepare for this, I went back into code and I started looking at Article 1.1 for property taxes. And I was like, okay, where is this in settlement? And I'm going, and I'm going, and I'm going, and I'm going. And as Tara had explained, there's a whole lot of stuff that goes up until the settlement process. So I finally got to settlement. And before I get to that part, the settlement forms that we have for you are to help you meet those requirements that are in code. And then in addition to that, we give you settlement forms that help assist over the state required forms. We give you forms that assist you in that. And then we give you notices, we give you a memo, and then we give you the set of instructions on how to do settlement. Then you turn it into us and we actually review it with the assistance of Crow, and then we give you an approval. So the settlement process is in code in it's in Title 6, and it's Article 1.1 in Chapter 27. There's 3 main parts in this chapter. It talks about the semi-annual meeting that's required between the county auditor and the county treasurer. It talks about the certificate of settlement, and it talks about the distribution of funds. So if you go into code and you read Chapter 27, it specifically talks about these 3 things. So the semi-annual meeting is supposed to occur, if you go in and it says, on or before June 20th and December 20th, the county auditor and the county treasurer shall meet in the county auditor's office. I don't know that anybody really cares where you meet, but it does say that. So just keep that in mind. So the purpose of this meeting is why we call this settlement, right? The county treasurer is telling you, this is how much I collected. And you are saying, okay, then this is how much I'm going to distribute. But there's a whole lot of calculations that go into that and balancing to ensure that you guys are coming to the same number. That's the settlement. So you're settling those taxes and special assessments that are collected during the preceding 6-month period ending May 10th and November 10th. So it's all of those taxes that are collected that you bill May 10th, you collect May 10th and November 10th. And then also there are other taxes, it says in code, settlement of any other collections required by law to be paid to the county treasurer. That's excise tax, fines and fees, those sort of things. Anything that basically the county treasurer collects that you are distributing out to all of your taxing units at the same time as settlement. And then the treasurer's certificate of tax collections to the county auditor. So that's part of the semi-annual meeting. The county treasurer is supposed to give you, here's my certificate of how much I collected. This certificate of settlement is the second part of the code in Chapter 27. And it says that it is due on or before June 30th and December 31st. The auditor sends a copy of this certificate of settlement to the state auditor's office. And then you use that certificate of settlement to pay the amount that you get the amount off of that to then show how much you're paying out. The third part is the distribution of funds. So the amount distributed will be equal to the amount shown on the certificate of settlement less any amounts that were advanced. So you guys meet up, you're doing the settlement, you settle with your county treasurer, this is how much I collected, this is how much I'm going to distribute. You as a county auditor, you do the certificate of settlement, this is how much I'm going to give out. And then you give each of your taxing districts or units a Form 22 to show how much you're distributing to them and what fund it's associated with. Distributions must occur on or before June 30th and December 31st. So before I get into the actual settlement forms, I did make a couple of notes that the county auditor prepares the certificate of settlement form, but that is actually, there's your part and then there's the county treasurer part. Your part is actually due to the county treasurer. In code it says at least 2 days before the semi-annual meeting. So before you guys sit down, you're supposed to give them a certificate of settlement. The distribution, we say it's the June 30th and December 31st. In code, it specifically states distribution is the 51st day immediately following each property tax due date. So that's where these, again, everything we do because it's written somewhere in a law or an ordinance. And so that is where this is coming from. Those due dates are established in code. So, in order to meet the state requirements or the code requirements, we have state-approved forms, and then we have other forms that we give you to fill out to help assist in the process. So the first state-approved form is the 49TC. It is, and then the required forms to assist in settlement. So, okay, state-approved forms, 49TC, 17TC, the Form 102, and the Form 105. Those are actually required state forms. Then our office requires the settlement checklist, the excise tax allocation, excise tax reconciliation, the fines and fees report, the quietus worksheet, and then your settlement to abstract reconciliation. So these may not be state-approved forms, but they are still required. And the purpose of these forms is to help assist you get to the requirements in code to meet settlement requirements. So the 49TC is the county treasurer's certificate of tax collection. This serves as the settlement of taxes. Every tax district is listed on it, and there are sections that are completed both by the treasurer and the auditor. Section 1 is the treasurer's statement of collections. So basically, what they're doing is in this first section just saying, this is how much we collected of current delinquent tax, penalties, and interest, less any late payment penalty collections or special assessments. They list the property tax relief amount, and then that gives them the total property tax for distribution. So that's section 1. The next section I have on here is section 3, but what I left out was a very important section 2, which is yours. So section 2 is completed by the county auditor. It's the taxes apportioned and distributed. It's the property tax and property tax relief amount distributed, and then you also have a column for the license excise tax that's to be distributed. So section 1, how much the county treasurer collected. Section 2 is how much the county auditor is going to distribute. Section 3 pulls the data from those previous 2 sections to give you the property tax relief amount due taxing district, then the property tax relief collections per treasurer's records, and then the balance of the property tax relief. So section 3 is all just pulling the property tax relief data from the first 2 sections. Then you have section 4, which is the settlement of late payment penalties. Underneath all of those sections is the final section that's completed by the treasurer. It's the settlement of any other collections required by law. So these are all of those other revenue that's collected by the treasurer that you distribute at the same time as property taxes as settlement. The next form that's required, the state-approved form, is the 17TC. It's the Certificate of County Auditor of Tax Refund Claims. So for each district, you have a tab in this sheet. It's a large workbook. Each district has a tab. And in that tab, you're listing every taxpayer that received a refund. And that refund is being deducted from your settlement. Then it summarizes the grand total by taxing district onto the first tab. Then we had the Form 102. It's the apportionment of taxes collected. So again, there's a sheet, there's a tab in this large workbook for each taxing district. Section A is the amount available for apportionment. And there's two parts to Section A. Section A, June settlement. Section A1 is December settlement. So in June, if this is your first year doing settlement, then in June you only filled out that one portion. For December, you're going to have both of those parts filled out. And then Section B is the apportionment, and Section C is the amount due to the state. So this is probably a blurry picture of what you're filling out, but Section A, this is just a picture of the form. So Section A is what you've collected. Section B is apportionment, so it's how much is going out into where, and this is for each taxing district, so and by fund. And then Section C is what's due to the state. Section 1 or Form 105 is the settlement sheet. It's the total of all the Form 102s for the county. So it's the summary for at the county level of your 102s. And it serves, this is your certificate of settlement. So this is that portion of law that requires the certificate of settlement. This is what form allows you to do that and meet that requirement. So in addition to the state required forms, we have other forms to help assist. We have the settlement checklist. We have the excise tax allocation because in addition to property taxes, you're also distributing out excise tax. Some of the excise taxes. I spoke to the Treasurers Conference. Was that last month? It was August. I really focused on excise taxes with them so that they understood what their role was. That portion of the settlement process, what their role is as far as excise tax, because it seems like this excise tax can be complicated. So I focused a lot on what all the various different excise taxes are, who it goes to, and then what you do with it when you get it. So the excise tax allocation sheet, what this does is it reports, okay, this is how much we collected of those excise taxes that are what's the word I'm looking for? It's used for the calculation for SWETA, so the school welfare and excise tax that comes back to the state. There's a calculation that's done on the specific taxes that are used for that calculation. Then we have a few others that are not subject to that. Subject was the word I was looking for. Those are at the other end of the sheet, and so then you can say, okay, here's a grand total amount of our excise taxes that we're sending out. Then we have the excise tax reconciliation sheet. This is so that you and the treasurer can agree, because excise tax is continued to be collected throughout the year, and it's not due like property taxes are on May 10th and November 10th. You have to have a cutoff date, on a date that you're going to say, okay, all the excise taxes that we've collected up to this day are what we're going to distribute in settlement. And so you have to reconcile with the treasurer that you agree, number one, to this cutoff date, and number two, that the amount that they say they collected through that date is what you are showing as available for distribution. Then we have a fines and fees report. So these are fines and fees that are collected at the county level and then paid into the state that then we distribute in a different way. Then we have our quietus worksheet. There is a quietus a worksheet for property tax, for excise tax, additional property tax, the treasurer's cash, and the quietus summary. So this is basically a summary of all the cash that is then reconciled to your forms to show for collection and distribution. In December, we have the settlement to abstract reconciliation. So as Tara was talking about in her presentation, the abstract determines, okay, this is how much each taxpayer owes, right? And so then you have to show that you reconcile how much you're distributing to the abstract. So your abstract and gateway needs to be reconciled to your actual tax collections and distributions. So to help assist you, because that's my job, so Janie and I are here to assist you in this entire process. So what we're going to be doing before the end of the month is send out a memo that will give you all the timelines of what's due and when. We'll be sending you instructions on how to do settlement, so it goes into more detail on each form of what needs to be filled out and how. And then we'll be giving you the forms to fill out. All of this information is placed onto the AoS FTP site. So if you do not have access to that or you've never gone onto it, contact me or Janie, and we will get you access. It's a very quick process to get you access, but this is where we're putting all of the forms. So we put it onto this FTP site. You pull the forms down, you fill them out, and then you upload them up to the FTP site. And then we then download your completed forms. And that's how we get these forms back and forth instead of through email. Then we go through the settlement review and approval process. So you're submitting all of your forms onto the AoS FTP site. We have contracted with Crow. They do the initial review. And then they send it to us. And if there are any issues, they indicate that to us and we reach out to you. If there aren't, then they say, this looks good, but we do a second check just to be sure. And then we give you a notice of pre-approval. Once you receive that notice of pre-approval, you can finish out your settlement process. But then to get your final approval, you have to give us that Form 105. It's your certificate of settlement. That's the thing that by code is due to us by December 31st. You've got to send that in to us along with any payments that are due to the state. Once you do that, then you get your final approval. So that is where I was supposed to hand it over to Janie and do a great fun game. We're going to do something a little different. But before I do, are there any questions that you guys might have? I covered a lot, but I was really trying to focus today more on why and what we do in order to assist you in that process. So any questions for the group? And if not, I'll be hanging out later and you guys can ask me then. Okay. So we have a few questions that I've taken from Janie's game. And if you get them right, you get a prize. And I have helpers. So Emily and Mark are going to help me. So I'm going to ask a question. The first person to raise their hand gets the answer. And if you answer it correctly, you get a prize. So, based on the excise tax allocation worksheet, what excise taxes are remitted to the state at settlement? Yep, you got it. It was SWETA.
SWETA.
Yeah. The welfare and school allocations, which can also be called SWETA or SWETA. I always get those looks. It's always so funny because people are like, that's not what they call it. Okay. What is vehicle sharing excise tax? Okay.
Vehicle rental tax. Vehicle rental tax?
It's not rentals.
Rental sharing.
This is excise on Uber and Lyft and those types of items.
No.
Right? No, it's not.
It's not.
Wow.
Yeah. She's on a roll here. She's getting it. Yeah.
Peer to peer.
Yeah. If you share a vehicle with somebody so that you ride share, but not really ride share, one uses it one time, one uses it another time. I don't know what that's called. It's ride sharing is what I call that.
It's actually when I own a Corvette and I rent it out
To me.
to, yeah, I rent it out because somebody wants to like fly into Indianapolis, and instead of going through a rental company, they just want to rent my Corvette for the week, right? It's like an Airbnb, but it's for cars.
vehicles.
Yeah, there you go. She gets a prize. Give it to her. Yeah, so it's new, right? It's new. Let's see. You guys first started collecting this at the county level. I think DOR's first distribution out to you was in December of last year. It's also been very unclear on how it's distributed out because of the way the code is written. And so it's supposed to be divvied out among your units based on their percentage of the total property tax collected. We're hoping to get that language cleaned up a little bit so that because they don't tell you what taxing district that car is in.
I have a motor home. My husband taught me into buying a giant motor. And we're interested in doing this in Speedway during the 500. So I'm understanding that's the method we use and not Airbnb. Is that true?
Yeah, so there's a third party, like a marketplace facilitator that you would go through. And they would actually pay the taxes that this vehicle sharing excise tax. Mm-hmm. Okay, what ledger is used to provide the amounts listed in Section C of the Form 105? Yep.
I saw this.
The fines and fees. The fines and fees.
The fines and fees, funds ledger? Yeah? Yep. Okay. Yep. Got it. Okay. Okay, now let's go on to more fun stuff. What country besides the United States celebrates Thanksgiving? Yes! Canada celebrates it the second Monday of the month of October. Okay, and one final question. What year did the Macy's Thanksgiving Day Parade first have balloons? Nope. 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 Okay, it was older. Nope, younger. Oh God, you guys are so close. Okay, I'm going to give it to 27 because it was 1928. Okay. All right, thanks, guys. And if you have any questions, and again, Janie and I are always here to help. Thanks a lot.